Listo, vale. Evaluative Activity 3, Ways to Manage. Good evening, my name is Carol Joana Trujillo. Activity for the subject of financial administration. My topic is ways to efficiently manage current assets. What is a current asset? It is the money or assets convertible into money that a company can to dispose of at any time. It is important to determine that periods of time defined in less than a year. Ways to efficiently manage current assets. The decisions to be made by the financial manager are of three types: investment, financing, and dividends. The chief financial officer is trying to achieve a single goal: creating wealth for shareholders. Investment decisions. The capital budget, which involves investing in long-term assets such as facilities and equipment, is one of the most important aspects because investing in them it constitutes an irreversible decision, which, if cancelled, can mean very large losses. Financial decisions. They involve studying the way in which the company obtains the necessary resources to carry out investment decisions. For example, you can raise funds through the sale of common stock or preferred stock, by financial contracts with a financial lessor, factoring contracts, the issuance of debentures or commercial paper through the stock market, etc. Dividend decisions. They involve choosing between distributing the profits of each year of operation among the shareholders or reinvesting them in new projects. The first theory in this regard, called the residual theory of dividends, establishes that the profit generated in a period of operations must be reinvested in projects whose profitability meets the expectations of the shareholders and distributed dividends only when said projects have been taken into account. Conclusion. It is known as currency because it is a type of asset that is in continuous movement. It can be sold, used, converted into liquid money, or delivered as a payment without much difficulty. In addition, we can understand current assets as all those resources that are necessary to carry out the day-to-day activities of the company, such as bank money, stock, and financial investment.
Hi, my name is Dana Diaz and my subject is asset investing. What is invest? Investing means allocating resources to achieve one of the following objectives. Basic person goals to satisfy certain needs, fixed expenses which constitutes a fixed investment. Adquiring financial assets to generate economic benefits, in which case it is said that a temporary investment is made. Companies. Investment necessary to carry out these normal operations. Investment of your temporary surplus cash to earn profits over the life of the investment. What is an asset? It is resource controlled by the entity as a result of past events and from which future economic benefits are expected. Types of investments. Fixed income investments. It refers to the occasion in which the issuers of the security contracts dividend the inverse become creditors of the issuers. Equity investments. In this case, the company issues shares and the investors become shareholders of the company, that is, residual properties of a part of the company. In both fixed income and variable income instruments, investment are represented by security. Investment parameters: performance, risks, expiration, negatability, liquidity. To conclude, as well, as well as asset investors might have rights to recover their investment, they also face risks than their inside investments.
Good evening. I'm going to introduce myself. My name is Lady, and my subject is required return. Uh, First of all, we are going to talk about what is a return. The return represents the reward for a person making the investment and acts to be any of the following three types or combination of them: interest rate, dividend, capital gain. We talk about interest rate. When the document explicitly establishes a rate of return, which is generally variable, the purpose of the offering variable rate is to assure the investor that his return will always be based on the prevailing economic conditions at the time of the interest payment, and that it will be higher than inflation of the period that had in his investment. The dividend is one of the forms of return on shares and can be expressed as an amount in pesos or as a percent. Common shareholders of dividend payment companies are typical eligible as long as they own the stock before its dividend date. The capital gain is the profit that is generated when the sale value of the investment is greater than the purchase price. Put it simple, uh, a capital gain occurs when you sell an asset for more than what you originally paid for it. Almost any type of asset you can own is a capital asset, whatever that is a type of investment. like a stock, bond, or real estate, or something purchased for a personal use, like furniture or a boat. I'm going to do a short conclusion about requirements return. Return is a profit on an investment. Is comprised of any change in value of the investment cash flow which the investor receive from the investment, such as interest payment, coupon, cash dividends, stock dividends, or the payoff from derivative or structured product. It may be measured either in absolute terms or a percent of the amount invested. And that's all. That's all our presentation for today. Thank you for joining us.
Thank you.